bring in Nick Twidale from ATFX, who joins me on set. Again, we're surprised by the jobs data. Your thoughts?
Yeah, every time I come in on these numbers, it seems to go one way or the other. I'm astounded, to be honest. I didn't think we were going to get a beat by that much at all, and it really throws a bit of a spanner in the works for the RBA. It's going to be interesting to see the breakdown on those, but that full-time number's huge and not from what you hear when you're walking the streets at the moment.
Absolutely.
For the Aussie, obviously that's going to give it a little bit of a bid tone at the moment, so I think it jumped from around about 25, 30, it's up through to 60. There are huge expiries at 64.75 today, about 2 yards worth, so don't expect it to go too far through there, just through sheer flow. But it should give it, certainly for the next few sessions, a bid tone, probably against the dollar, but more on the crosses. That's how I'd probably be looking to play it. But it really does, it does make the RBA's life difficult, doesn't it? This really sort of volatile jobs numbers.
It does, and it's really extraordinary when you think about, during Liberation Day, the volatility, there was this talk of maybe a 50 basis point cut. Now 25 is factored in, but when you've got such a strong jobs market, as you say, like it's going to put a bit of a cloud on it. This is what you've got in the daily moves though with the Aussie. So still, I guess, that resistance around 64.5.
Yeah, I mean, this is the bigger, longer-term chart, and we've had a really nice bounce. And in the space of a month, we saw the annual low and the annual high, like dip down under 60, and we thought it was kind of heading much lower, and then a nice bounce really on dollar weakness. So it has been playing a relatively tight chart, tight range in recent weeks. So 63 to the downside and sort of 65 to the top side would cover you. And if you did have those options expiry, and the size of what we've seen today probably indicates what we've had around, and that's why it's staying range bound. But we're probably, again, on the Aussie, we're probably going to be looking for how these trade deals come out, how things go in the US. The big moves so far this year have been on the US dollar, let's be honest.
Yeah.
But some of the data we're getting out here, like those jobs data, I think it does lend to further Aussie strength on the crosses. But really for the Aussie itself, that's a massive number that we've got today, but in all likelihood, with the amount of data we've got in the US tonight and Jerome Powell speaking, the real big move is probably going to come later in the day.
All right, well, let's move to some of the other pairs. And given that we saw the US-China trade deal, but before that was the US-UK, what are we seeing in sterling?
Yeah, it sort of skipped under the radar a bit, but sterling's held in there quite nicely. It's looking, as you can see, it's at the top end of its range, and it really is battering above that resistance levels just beneath 135. If we do see, and I think once again it will take a turn in the dollar rather than significant sterling strength, but if we see a combination of the two, that break of 135 will probably see a relatively quick move up to the 140 levels just for a pure psych reason. And then you're looking at the high 140s again. So it doesn't feel like, it feels like we're still basically assessing what's going on with Trump, with what's going on in the US. But I think as we hit sort of the second half of the year, we will start to see some big moves, and cable's probably one that's going to move fairly hard.
And what about the euro?
Euro, I'm sort of a little bit more bearish on the euro. Okay. I think we've probably seen a short-term top up there. I think that's up around 116. We're back down kind of closer to the middle of that range. If it breaks down through sort of 110, it could accelerate again. But again, with the euro, we're probably looking at the US at least dominating 2/3 to 3/4 of the actual move. Support coming in around 107.92 on that 200-day moving average is probably a fair level, I think, at the moment. But we really, like everyone in the market and like every other product, we're just looking for what the real update is and to really price in what these tariffs are actually going to mean for trade. Absolutely.
All right. Well, we always love looking at the yen as well. It's holding around 147, is that right?
Yeah, it is. It's just beneath 147. We sort of topped out again near 149. Talking to the Japanese market at the moment, they're in favour of buying dips. So obviously a big dip on that daily chart take you down to around about 140. But those lows that we've seen and that start of that break up was from about 145. We'll probably see good buying interest at the moment. Once again, we've kind of been slow on Japanese move. I think we're still going to see a relatively hawkish BOJ moving forward, especially if we start to get clarity. The other thing in favour of Japan is they were one of the first cabs off the rank in terms of trade talks with the US. So positive news on that. I think the China news is actually positive for the whole of the Far East, and I think Japan's and Japanese stocks have done well out of that. So you might see some sort of yen appreciation, and if yen data starts to come in and show more of that wage price pressure plus inflation, then expect to see the BOJ get a little bit more hawkish, which could push dollar yen down.
I mean, the talks between China and the US obviously positive, as we mentioned, for our dollar too. But what about the loonie?
Well, the loonie, it's interesting. I mean, that chart shows you a bit of a story with the loonie. It's like that spike to the top was on the initial tariff announcement. And don't forget, when we go back to the start of Trump's tariff, it was Canada and it was Mexico. And it's kind of consolidated now and it's trading as it used to do. Its fundamental will trade a lot in line with oil prices. So as you can see, you've seen sort of dollar appreciation on the back of the US dollar appreciation. But in those ranges, it's a bit difficult to see on that daily chart because it goes all the way back to 2021. We're seeing good movements in the loonie on the back of oil moves, but still, I think anyone trading the CAD in particular is looking for certainty in what's going to happen on that northern US border in terms of tariffs, and we know businesses are being hit fairly hard in Canada at the moment. So.
Indeed. All right, thanks for coming in on a busy day. Nick, as always, Nick Twidale from ATFX.